Hey, welcome to the closing beat, everybody. Happy Tuesday. There we go. It's on. I was just making sure. Sometimes I talk and then say all this good stuff and, the mic's not on. Yeah. Hey, that's kind of like a thing for the New Year's. We're going to be putting out more videos, back to fin tips, doing all kinds of good things, a couple secret projects, and I'm hoping not to make too many mistakes, right? With the mic working and all that stuff. But it's probably going to happen because we do numbers here. That's what we do. We're financial advisors here at Jazz Wealth, and today we're going to cover the stock market real quick because there's not a lot going on out there. I'll also encourage those of you that haven't used the forward lookup tool in the research site, check it out. I've got a lot of cool scans that people put together and sent me, and I was like, oh, wow, I didn't think about that one. So have fun with that one. Let me know. Of course, we're building it at the moment and expanding it. So if there's any bugs or anything, just let me know, and we'll be able to work on that. We build everything here from scratch at Jazz Wealth. So your client portal, all your performance, all that stuff you could see inside what we call the dojo. Just kind of a fun way to do that there. So adding a bunch of cool things next year. And so have fun with that and enjoy. And thank you for all of you who have joined us this year as well as last year and the last going on 5 years now being around as Jazz Wealth. Happy. All right, stock market wise, it's the quiet week, right? So there's not a lot to cover. I wanted to have some cool things to talk about, of course, like I always do. So I'll be sharing some of that with you here today, but let's take a look at the S&P. Well, this would have been, today we did not close at highs, right? We hit a new high, but we have officially 69 new all-time record highs set this year. 77 is officially the record, or no, I think 77 was the record. But we didn't get there here today, and there's not enough time to get to it. Nonetheless, we'll probably, or hopefully, we'll have at least 70 new highs for the year, but otherwise we have 69. What's interesting about this is we have just over 25% gains in the S&P year to date, and about 1/5 of that has come in the last 4 days, right? And I'm serious, I'm not joking. That's the sort of trouble with trying to time the market is just like that. In 4 days, 1/5 of the entire year's gain has been added to the pile. Now today, if you're looking through the S&P, I'll point out a few things. You could use the JETS if you want, JETS. This is the airline ETF. See a little bit of a bounce there. Well, you have names like American Airlines up 2% on the day, Delta Airlines gaining almost 2% on the day. Go through some of the regionals as well. Southwest Airlines trying to come off of lows. That's a good thing there. You got JetBlue, not as active, but also stronger on the day. And even some of the weird ones. And by weird, I mean just like the smaller out of the headlines type stocks like Allegiant, very popular down here, also having a good day as well. And it's just because you got the opportunity for people that get COVID to quarantine for less days, 5 days now, I believe it was. So apparently it's good for the airlines because the employees had an issue there over Christmas and. Well, you saw what happened anyways. If we look through some of the stocks in the S&P here today, you got Campbell's Soup, a rare, strong day for Campbell's Soup. I didn't catch any news or anything on this one. It was just up about 2.8%, which is fairly odd for that one. Dollar General trying to move its way out of this very sloppy consolidation here. Dollar General being a little bit quiet lately, just bumping up around the same series of highs in that 225, 227 area, and officially trying to get over that now. You've got UHS. I thought this was cool because if you look from a technical pattern perspective, you have a downtrend, very clear downtrend, series of new lower lows and lower highs. So any basic technical analysis type trader is going to recognize that. Then all of a sudden you see, we made a new low and, we made an equal high. We were then unable to make a new low. I find that interesting, and we're back up to those highs. So now you have a very clean series of highs here where it seems like the stock is trying to turn its corner there. So that ought to grab the attention of technical traders, and I just thought that'd be one for a watch list. Nothing exciting to do with it now, but kind of cool. You got Exelon, EXC is the ticker symbol, breaking out today. That'll be a new high. I wasn't going to do the new highs and lows today, but I caught this one. Nice little clean breakout, and on a low volume day, it closed at its highs of the day. So you like to see things like that. On the downside, you got Twitter refusing to participate here in the last 4 days. Remember, 1/5 of the stock market, S&P's gains, have come in the last 4 days, and Twitter has done nothing. Zilch in the last 4 days there, so real weakness with Twitter. And then you have Bath & Body Works. There you go. I'm trying to always say that one wrong. Bath and Body Works is BBWI. Also in the last 4 days, nothing going on there as well. I want to point out real quick the most overbought and oversold stocks in the S&P as we go into the end of the year. First, you have CF Industries. That would be it is the most overbought stock at the moment in the short term. Of course, I'm talking short term here. And so very extended there. There's only 39% of the time that it finds itself positive 1 week forward from being this extended. So very low odds there. You got Lamb Weston, also overbought, but coming out of a downtrend there. 44% of the time it finds itself higher over the next 5 days. And Digital Realty would be the third most overbought stock in the S&P at the moment. 47% of the time it finds itself positive 5 days from now. On the downside, it's going to be solar. Enphase. Let's just do this. Get that out of the way. Oh, you can't see the tickers. I'm sorry. So you have Enphase, the most oversold stock currently in the S&P 500 right now. Hasn't done anything in the last 5 days. 50% of the time it finds itself higher over the next 5 days. And SolarEdge is actually the second most oversold in the S&P 500. 55% of the time it finds itself higher over the next 5 days by about 1.3% if you're using our lookup tool on the research site to play around with some of that stuff. Thought that was pretty cool. Now, we have the last few days of the year. Uh-oh, what did I do? Oh, it's just frozen for a second. So last few days of the year, we're counting down the clock here. I thought it'd be fun to see what normally happens in the stock market over the last 5 days. Do we get any sell-offs? Is it normal to have a slight pullback, slight rally? What is it as we wrap up the year? And here you go. Looking back over the last 35 years, I did two things for you. I put the S&P, the average performance over each day for every year, just putting them all together, coming up with an average. So you've got 5 days to go, 4 days, 3, 2, and the last day of the year. Then I said, well, let's strip out every year except for years like this year. So when the S&P is up over 20% like we are this year, let's see what its performance looks like and see if it's anything different than normal. So here we go. 5 days left to go. The S&P averages a nice little gain, 0.79%. 4 days left to go. You can see it starts getting just quiet. This is very normal. We're not even going to be around for the next couple of days just because it gets quiet. But 0.24%. 3 days to go. Everybody's gone. They're ready to celebrate the holiday. They can go party for New Year's and stuff. 2 days to go, 0.2. And the only negative day is, in fact, the last day of the year on average, but it's very small. It's like essentially a coin flip, right? We were just bouncing around flat all day and just happened to average a close a little bit lower. If you look at years where the S&P was up at least 20%, you've got a small gain, 5 days to go, a slight little rally. It just comes in later, right? The market's rally in every year already has happened. Well, when we have 20% higher years, it just comes towards the last days of the year, slight little gain there, and then it too fades away going into the end of the year with just a coin flip type day being down a small average, 0.03%. So that's what you have going on there. And I don't know, I thought that'd be fun to take a look at. If that is something that you are thinking about sticking around and maybe trading the markets, expect it to be quiet, very quiet. Here's the Dow back up to new highs as well. Apple, well, let's do this here. Apple closing some stores in New York City because of the virus there. Again, really odd. It's just fascinating to watch the rest of the country and then for me to go outside and walk around and like just be living life. There's no big deal. Goldman Sachs, slightly lower on the day, also just kind of a flat day. They're going to require booster shots for all of their in-office employees there. Possibly 2, because I think there's now 2 extra booster shots. That's a lot of booster shots. You got Disney continuing to break from this Walt pattern, we'll call it. Walt Disney World. See the W? The W pattern was actually pretty popular back in the day. Technical pattern where you'd look for a downtrend, and then you would essentially just turn this chart into a line. Do I know how to do that here? I don't know quickly enough on this chart how to do it. You, instead of looking at candles, you would look at a line, but you can picture it there, right? You got a line moving down, slightly up higher, a higher low, and you would essentially be looking to buy right over the peak of the prior high. Well, that was called a W pattern. We always had fun calling it different things, but we'll call it the Walt Disney pattern today. And that's exactly what's happening. Technical traders on light volume make technical patterns more pronounced. That's all that is. So you've got that going on there. Walmart. Also one of the better performers here today. The I didn't catch really anything on Walmart. Some of the names that just had good days, they were on someone's list as a top pick. That someone would have been bigger than me, meaning like an analyst at Morgan Stanley or something. That's likely why you see some of the moves on these. Of course, retail sales were great as well. NASDAQ, there you go, sitting at those highs as well. Just less than 0.5% from losing top spot, meaning underperforming the S&P 500 for the year. You get the S&P 27.52, the NASDAQ 28.12, so 0.6% away from underperforming after kind of leading the charge in the later part of the year there. So we'll see what happens. That doesn't normally happen. The NASDAQ does tend to outperform, at least over the last 10 years. It's outperformed the S&P quite a bit. Stocks in the news there, well, not really in the news, but could you think of a more hated stock at the moment than Peloton from a performance standpoint? Just question the market. The market's up, the NASDAQ's up, the S&P's up, basically everything is trying to make a last-minute move. Not Peloton. Peloton's going the opposite direction, and there's no sign of interest in this one. I mean, this has got to be the most hated stock already. Today, some of the weaker ones, by the way, were, Pinduoduo, some of the Chinese stocks, Alibaba, just a touch lower, a little sell-off day across the board. You had China down overnight. Baidu a little bit lower as well by about 2%. So that's kind of normal there. One other thing. I want to point one other thing out. Two things. Broadcom, for me, is the only position that I have as far as a short-term trade. It is moving nicely so far in the right direction. Got about 8% of the total premium, but I haven't done anything. Just holding it there, so no need to play around with anything else. And the other thing I want to share with you, this goes into next year, right? Do you know how extended the stock market is? And I've tried to share over the last couple of weeks different metrics that you could look at other than price, right? Just a way to look at various extended overbought, oversold scenarios. The stock market right now is incredibly overbought, very, very extended. Doesn't look like that. Maybe it doesn't feel like that to you, but it is incredible. So I want to give you another way to see this. Where it's more the data, less my opinion. And you really want to question this if you're close to your investing goal. I'm going to put the advisor hat on for a second. If your kid's going to college, if you're about to retire, if you've been saving for a car, a house, a second property, whatever it is that you're investing for, you really want to consider the level of aggressiveness you're taking with the dollars that you have. And here's why. Here is the S&P 500 looking back as far as we can. 93, I believe, in this case. 1992, to be exact. And what we're looking at is the rolling 3-year returns. Very popular for more of the investor type person. Not the short-term trader, but more the investor. Take a look at this. This is the interesting thing that just happened. Some of the analysts pointed this out. The rolling 3-year return for the S&P just went over 100%. That's not normal. That is called extreme levels, right? So over 100% is your rolling 3-year returns there. That is the highest officially since 2000. This right here, for some reason it looks like it's 99. So we hit 90. I'll try to hover right over it for you. 94.44, right? So I don't know why it pops up as higher. But this would be the highest we've been since the dot-com. Well, you know what happened. If you're old enough, you know what happened. The dot-com bust back in 2000. The stock market, ask yourself, is it normal for this to have 100% 3-year rolling returns? No, no, it's not normal. The average is 39.26. So in any rolling 3-year period, you say the average should be about 39.26%. Given the history as far back as we're looking. That number would change the further back you go, but this is where we're looking. So you have the market telling you it's doing something that the last time it did it, there's only one other time I can show you that it did it. Nothing good happened from that. I'm not saying that we collapse or whatever from here. We could also continue higher up until the 120s and 30s, but we're getting into that area that it is extremely rare for the market to be there. And if you're a bull, that's awesome. I hope for pullbacks so we can buy into them and everything. But if you're going to invest chunks of money right here, or you have large sums of money invested aggressively right here, know that you're holding at some very, very weird and extended positions here. So careful with what you're looking at there. Just pointing out different things, you know. Another way to look at it. And that's really all I have for you today. I was going to keep today short for you. I will take your questions if you have any. And I don't mean to be a buzzkill. Sorry, Matt. I'm actually cheering for a pullback. I think a really good pullback would be buyable. I have no problems with that. But how do you get aggressive right here when every metric, both from a retail standpoint, meaning the metrics you may look at on retail trading platforms, all the institutional background metrics that they look at, not all fundamentally, but from that perspective, more detailed analysis, very extended, but just overbought. It's crazy. And nobody seems to care. Yep. Obviously, a very significant difference in the 10-year and overnight funds rate as well. So that bothers me. I would like to see us start raising that Fed funds rate pretty quick. I worry about them not doing that. Maslam says, you know what? I lowered my projections for the next 5 years in my retirement spreadsheet. I don't blame you. I don't blame you. So for what now, 4 years, Vanguard's been saying, hey, the next decade's going to be lower returns. They could still be right. It's only been 4 years, but yeah, the people have missed out on that. I'm just starting to argue that now if I had to say the next 10 years maybe lower returns, I'm starting to raise my hand, right? So 4 years ago, I didn't quite do it. I was like, I hope not, but now I'm kind of like, how does this continue? Like, can we have an off year? Is the market allowed to have a down year and just take a break for a while there? That'd be cool. But that's good. I like that. And also in Nest Egg, if those of you are using Nest Egg with us, we can customize those returns as well. You can actually put it in there to say, I expect a pullback and then a series of smaller returns. So that's kind of a fun thing to do too, where you sort of hit your portfolio or hit your net worth by some amount and then say, now just pretend it doesn't come back right away. In other words, making a lot of time pass with lower returns. So that's kind of fun to do as well. Yeah. So what was a really good pull? Well, it would work for me. I'll take 10% or more. I covered that in our notes from Jazz email over this weekend, how long it's been and what the odds are of that. And we are, again, extremely extended past the average time that we have a 10% pullback, right? So I'd welcome more. I think you would too, right? Oh, Miriam likes her pullbacks, don't you? How do you plan to play your 2022 stock pick? Roku, selling puts, buying long calls, purchasing stock. Well, that's a different. So short-term trading, I tend to just use options. I don't, it's cheaper, obviously, if you're using different levels of margin. It's also more fun because I like to be a little more active. And it's different from what I do on the day-to-day basis. From an investment standpoint, I would just use the raw stock for that one. Yeah, no need to do anything crazy there. What do you do about overbought markets with long-time investing? My argument is no new chunks of money, right? You do your dollar cost averaging. We're all going to go, you don't try to time it with that. But if you're one of those that says, I sold a house, I got $300,000, nothing else to do with it, do we have to hurry here? Do we need to put it in at all-time highs? That's my argument. Don't put it in just yet. Hold off. Let's do something really conservative. So when the market falls 10, maybe you only fall 1 or 2, then turn around and get more aggressive. You don't have to pick the bottom. You just want a better price. It's like buying a car. All you want to know is that you weren't the one that paid the highest price. You're never going to know if you paid the lowest possible price somewhere in the middle or whatever. You just want to know you're not the guy that came in there and said, I'll take it. It's fine. That's where I feel about the market right now. Yeah. And which is also part of the reason why we're building cash a little bit in our funds. The more aggressive funds, not all of them. Yeah. Roku's the pick for next year, but what would be a pick for a snoozer that might wake up, like ATVI or DraftKings pins? I would probably say I'll go with Boeing. I mentioned yesterday on that one. For Boeing, I'd say that's a snoozer, right? Just kind of chopping around, a little bit lower recently, but otherwise, look at this period of 1, 2, 3, 4, 5 months of doing nothing after pulling back. So if you had invested in this a year ago, see how you're basically right where you started? I can't go back any further, but you're basically right where you started. That's a snoozer to me. I think that one wakes up looking at Dow stocks. Yeah. Oh, yeah. A little real estate in your portfolio. Yeah, it's got to be a hard time out there for real estate investors not to want to maybe take some profits on houses as well, you know? Especially if you've been in it for a while. I'd imagine that's a concern. If you were already going to sell in the next 5 years anyways, you got to be looking at your house now or whatever property you have going, I mean, you want to give me what for that house? How much? Right? I'm with you on the Zillow thing. Anything in the southeastern United States, I'm very, very keen on price, just because I'm always looking. And I have never seen, there's now some price cuts out there, but I've never seen more, here's a property listed for sale, comes off market, goes back on market for a higher amount. I haven't seen that in a while. Yeah. Most of the index gains are only a handful of companies now, though, in the way back machine. Well, you're right about the first part. I'm not sure what the second part means, but you're right. The top 6 stocks basically pulling everything along. Love it or hate it, that's what's happening. Yeah, well, hopefully, I don't think 2022 is the year of the CD. But hopefully it gets a little bit better. I don't know if that's what you're asking, but no, don't think the CD is going to be a best bet. You de-risk quite a bit, sold a lot of it. Yeah, cool. Yeah. I don't think anybody would blame you for taking a little bit off the table. Now, I'm not one to, I don't like hedging so much, but one to just say, I'm going to put a little cash over here. I don't know what happens. Hopefully we get a pullback, but to have some cash after this year, come on, a good year, good couple years. Harry, for your saving, tell us about your first trade ever. I don't actually remember the symbol, but actually I wrote it down. I don't remember the exact first trade ever. That's a tough one. Cool. I like it. You guys are getting along today. I didn't catch Kathy Wood's pick. I wasn't watching. I'll go knock on her door and ask her. All right, I'll wrap it up there. I wish you a good rest of your week. We will not be here December 3rd. We will be back to announce the super duper Guess the Dow winners for second and third place, $500, $250, and $100, and start you off the new year with some money, right? Or big credit to your account if you're one of our clients, right? We're doing that? Okay, we're doing that. So we'll see you then, and you enjoy the rest of your 2021. We'll see you in 2022.